right. Okay, so good afternoon to everybody in person and online. All right, thanks for being here. Thanks for being on time. Yeah, so managed to start a little earlier than usual today. Yeah. Anyhow, we won't get into all the details, but I tried to start back. Well, I started back doing some videos today. I tried to do the Jan 2024 and May 2024 before March, so people have it for mock, because I'm pretty sure teachers might pull from it for mock. And then I did the I'm hoping to get Jan 2025 out as well, but I don't know. But we'll see how the production schedule goes. All right. Okay. Yeah. So I recorded the 2024 January question 1, and when I clicked stop or whatever and went into the software, I realized I only recorded my face, so I recorded nothing of the question or the solution. So to go and redo it, but after not having done videos for a while, something was bound to go wrong. Anyhow, there's Marcus. Hey Marcus, good afternoon. How you doing? Good to have you on. Hey Kenny. Hey Shania. Good afternoon. How y'all doing today? All right. Oh. Okay. I thought. All right. Hey Alexis. I thought you had logged in already. Okay. Well, good to have you on. All right. I know Jordan is usually on 2 devices. Oh, one today? Okay, cool. No problems. All right. So we're missing us a couple of people, but we give them some time, but we're gonna starting now because it's about 1:15, right? Yeah, so thankfully we are a little earlier today, so we should get through a little more work, right? So, ladies and gents, we are in the process of doing some revision of income statements. So over the past few sessions, we started to build over the income statement from scratch, starting from sales, going to cost of sales and that kind of stuff, you know. Hold on, let me just let in Yuri here. All right, hey, good afternoon, Yuri. How you doing? Good to have you on. Good to see you. All right, so we now starting a question there, so don't worry, you miss anything. Yeah, man, good afternoon. All right. Yeah, so the questions I wanted to do today, just to give you guys a bit of a break from the regular stuff, although some of that might pop up, is some of what I call the irregular questions, right? Now, so let's just go through the usual thing I like to go through, just to kind of warm the brains up, right? So why do people start businesses? To make a profit. And there's a very simple calculation to that. If you think to CSEC maths, profit is equal to selling price minus cost price. And this, I know that's where I'm going. When you scale up selling price, you get revenue earned. And when you scale up cost price, you get expenses incurred, right? Now, so how do we earn revenue? By selling or providing a good or a service. And how do we incur expenses? By using a good or a service, right? Like we use electricity, we use Wi-Fi. I don't want to say we use people, but we utilize their skills and their qualifications and their expertise, right? We rent places, etc., etc. So we have things that we do. 1 second, huh? Oh, okay. Oh, I did erase it. Right, there you go. Yeah, anyhow, so, sorry, 1 second. Right. So we earn revenue, we incur expenses, and the difference between what comes in, the revenue, and what goes out, the expenses, whatever is left is profit. Now, of course, if you have more coming in, more revenue being earned than expenses being incurred, you'll make a profit. You're earning more than you're expending. But if you have less coming in than you're expending, what's going to happen? You're going to make a loss, right? But at the heart of it, there's this concept of inflow and outflow. Revenue is the inflow, expenses are the outflow. So this question, which is from the May 2017, so everybody should have a copy. Does anyone in class not have a copy of Kwame's punches? Everybody have? Okay, good. Right. And those online, I sent it in the chat, right? Like I separated it from all the other questions, right? So what I'm going to do, let me zoom in a little bit more here so we could see Kwame's punches, right? So the first thing we're going to do, right? So far side, we're on the screen, right? So Kwame's punches. So in the year ended 30th June 2016, Kwame sold 25,000 fruit punches for a total of $275,000. All right, so it says part A is to do it. Calculate the selling price for each of Kwame's fruit punches. Show all working clearly. Now, we don't have to drop an account for that, right? If he sold 25 fruit punches, yeah, go ahead. Yeah, so that's a very good question, Liam. Do you get 3 marks for that? And yeah, you know what? Gratefully accepted, right? So there's no one correct way to show the working. But what is the working? If we sold 25,000 items and earned $275,000 from the sale of those items, how do we calculate the selling price per item? We divide. We divide the total money coming in by the total number of items sold, right? So let's do the working right there. You could use it. Please feel free to use your calculators. That's not a problem. Yeah, I believe so. All right, so this is the 2017 one, right? John. Hold on, am I missing something? How about this one way? Derek. This one. All right, well, I guess I have to do a sheet for this. No problem. That's cool. All right, so to put that one down, put this one up. Right, okay, cool. So, Gilly, Miss Gemini, Tiffany, Phoenix, Samantha, Amaya. How are you doing? Okay, right, so while you're working that, and what I'm going to do as well is let me split the screen and I'm going to pull up part B. Okay, so maybe I had to pull up a little bit more. Okay, maybe I had to zoom out too. Okay, now, give me a sec. Right, so this one. Right, and it says Kwame's costs for each fruit punch are as follows. So tropical fruit mix is $1.50. Milk is 68 cents. Cane sugar is 20 cents. And flavor booster 12 cents. Sorry, who's that? YH. Thanks, son of this to your teachers has been great. Yeah, you're welcome. No problem. Christina, moving on. Yeah. They didn't specify. So how many marks were it? Maybe start from sales. You shouldn't have to because you see, like this part B has us calculate gross profit on each one. So to me, it makes more sense to start with just gross profit, which is this one multiplied by 25,000, I think it is, and then your expenses. So yeah, start with that now. Okay. Right. Oh, here's Mandeep. All right, let me mark Mandeep. Hey Mandeep, good afternoon. How you doing? All right, good to have you on. Yeah, I started a little earlier than usual today. Because I ran early and late, which sounds kind of stupid, but anyhow, but good to have you on. Didn't miss too much. We're doing the May 2017 question. It's an income statement question. We'll shift this across a little bit. Right, cool. Let's zoom into about there. Okay, right. So, sorry. So the gross profit made by Kwame and each fruit punch show all working clearly. Right. So we know the selling price was it 11? We said. Hold on. So let me do so 2017 May paper 2 question 3. Kwame's punches. There's punches, right? Yeah. Okay, cool. Thank you. Okay, cool. So for part A, which was the calculation of selling price per unit. Okay, so we have 270. So total revenue earned. Now you don't have to use these exact labels or exact phrases. You could just put sales revenue, right? And that's 275,000, right? And what are we doing with that? We are dividing that by the total number of units sold, right? So number of units sold, right? And you can put number of fruit punches sold, right? Which is how much? 25,000, right? So if we do 275 divided by 25, you get 11. And just to make sure we have no decimal places, we do that, right? So this is the unit selling price. Oh, sorry, 1 second. All right, okay, cool. First piece, right? Now for part B, they want us to calculate the gross profit per unit, right? So we have the selling price. So gross profit, what is the general formula for gross profit? Selling price minus cost of sales or cost of goods sold, right? what did they give us in this little section down here? They gave us the costs of each fruit punch, right? So what do we have to do with these figures? Add them up, right? And that'll give us what? The cost for each fruit punch. So they gave us the breakdown, the tropical fruit mix, the milk, the cane sugar, the flavor booster. These are the costs, right, for each fruit punch. So all we have to do is add up those costs, get a total, and then do what with it? Subtract it from the selling price that we just calculated in part A above. And that'll give us the gross profit for each unit. All right, so this next one is calculation of gross profit per unit. Right, now you could say per unit or per fruit punch, doesn't make a difference. They both mean the same thing. Right, zoom out a little bit. It's still, yeah, relatively visible. Okay, cool. Right, now Google Meet, if anything is too small and you need me to zoom in, just tell me, it's not a problem. Right, I don't want you all to be fighting up to see anything. All right, let me just make sure. Okay, I didn't not seen Aisha, Jadon, right? Shamo. I think, yeah, okay, I think I have everybody else there. Right. Okay, cool. So this is dollars per unit. So the selling price, dollars per unit, is, we said 11? Right. And we have to minus the cost per unit. Right. Now you could do a whole separate column and list out each one like they have right here, or you could put a little work in, right? So 150 plus 0.68 plus 20 cents plus 0.12, right? 1.5 plus 0.68 plus 0.2 plus 0.12, right? And what we'll do, we'll get some decimal points going there. Right, so that's only 250. So it's 68 cents and 12 cents is 80 cents. 80 cents and 20 cents is $1. And $1 plus $1.50 will give us $2.50, not so? And all we have to do is subtract that 250 from the 11, which will give us, I think, 850. All right, cool. So this is the gross profit per unit. Okay, cool. All right, so I'll take a little pause here, a little pause for our cause, as they say. All right. So we're in class, people. Right. So Teresa and Liam, how are we feeling? What we have on board so far? Any questions, problems? Any want to re-explain? No. Nyla, Paige, what about you all? Good. For part B, it said calculate the gross profit made by Kwame on each one. Right? So if it was total, then yeah. I mean, for the income statement, for sure, we will be doing that. All right? I commented that just now, right? All right. Noah, how are you feeling about that stuff so far? We okay with that? All right. So Jaziri, Valentino, Kelsey, and Anessa, how are we feeling with those first two things there? Any questions, problems, issues, or are we all right? No? All right. Okay, Google Meet. All right. So I'd love to call everybody name, but you all know yourself, right? So if you guys are good with that, just kindly give me a G in the chat. If you need me to re-explain, that's not a problem. Just give me a quick R. Right? And if you could zero in on which particular, if it's part A or part B or both of them, that's not a problem. Just let me know. What, boy? 11 out of 12 people, boy? All right, cool. Have a high response rate. Actually, 11 out of 11, because I forget Jordan in here twice. Right. Okay, thanks, everybody. Right, so as you could see, it was not your conventional income statement question. So a lot of times people come in with this expectation of how the question is supposed to come. And then every now and again, you get this little thing, oh, it didn't come that way, right? But you have to be flexible enough. So remember, the income statement, although they might teach you, yes, there's this format and you have to follow this, the income statement is not a format. The income statement is a concept, right? Just like how anybody here ever saw Thor Ragnarok, right? And you ever saw the part where Odin says, Asgard is not a place, it's a people? Right. It's something similar to that. The income statement is yes, it's the calculation of profit, which is revenues earned minus expenses incurred. But the presentation of that could differ depending on the type of business. Like clearly here, he's not a service entity. He is selling something. Agreed? Right. But they didn't give us any opening stock. They gave us no purchases. They gave us no closing stock. What did they give us? Selling price. Well, we had to calculate selling price per unit based on the total revenue earned, the total number of units sold. We had to work backwards. So this question was a little more math-based than accounting-based. Sorry? Question? Right? Okay. So what I'm going to do is I'm just going to send a couple of quick pics in the chat. Okay. Right. Okay, no problems. Right, and also just a note, my WhatsApp, I don't know what's going on with it. It's giving trouble. So like people are sending me messages, and they're not popping up on the home screen. I went into like settings and notifications and checked to see if like it was, because my son's playing my phone now and he's turning off stuff. He opened my menu. I had no idea how he opened it. Like, okay, cool. Clearly, like, have powers anyhow. But yeah. So I can't seem to get it to work. Yeah, like WhatsApp, like the messages are coming through, but I'm not receiving notifications of such. Right, and we will send the solution. Yeah. Yeah, me too. But to keep it that small, the price had to go up. So. Yeah, I agree. So it's either that or cut on the class size and then cut the class to hour and then do two classes in the 2 hour space. Then everything had to be concentrated and faster. So I'm not a fan of speeding things up. Income statement in college form. Hey, nice. Yeah. Me? Oh, well, I mean, yeah, coming to talk. I mean, some talk will happen, right? Anyhow, I'm gonna come back here for a second. Right, okay, so.
Oh my gosh, Chris. You know the thing that we did with our thumbprints? Do you remember that? Wow. When we made you put ink on your thumb?
Yeah. Right.
We'll still have that on our walls.
On your wall?
On my wall.
We should put one up on this wall too.
We should. I'm very down to do that.
That's alright. Sometimes things do occur to us. Like, remember just now how it printed the pages back, like page 2 and page 1? All I had to do was put that first page at the back. Which I did when I reached by Teresa. Anyhow. Alright. Okay, folks. So we answered the last part of the question, part C. So it says Kwame's other costs for the year include the following. So we have rent, electricity, insurance, wages, maintenance, and repairs. Sorry, give me one sec. Kobe Bobby, thanks for help. Yeah, Kobe, no problem. Happy to help. Right, hope you're helping other people pass as well. Right. All right. Talita, good afternoon. How you doing? Right. So additional information. Now, this is where it gets a little interesting, right? So they give you some easy stuff to deal with first. So now they're kind of cramped it up a little bit. Now, I'm not trying to frighten you or say that it's super hard. It's not. It's just a bit unconventional. For the 2 years ending 30th June 2016, Kwame has owned 5 blenders valued at $2,700. Before you read any further, remember, what is Kwame making? Punches. To make a punch, you probably have to blend it up. Okay. Now, the first phrase is for the 2 years ending 30th June 2016. Okay, cool. Right? He has owned 5 blenders valued at $2,700. Okay. He expects to replace all 5 blenders by 30th June 2017. Okay. So, before we read any further, quick question. So, down here it says, draw up Kwame's income statement for the year ended 30th June 2016. And in the previous part, in the year ended 30th June 2016. So, our current year end is what? 30th June 2016. When is 30th June 2017? 1 year from now, right? Now, if it says for the 2 years ending 30th June 2016, right? And then he expects to replace all 5 blenders by 30th June 2017. So if at 30th June 2016, 2 years have passed, on 30th June 2017, how many years would have passed in total? 3, right? Because 30th June 2017 is 1 year from now. And then as the question says, at now, 30th June 2016, we've already had them for 2 years. So if 1 more year passes, we would have owned them in total for 3 years. Okay. So, for the 2 years and then 30th June 2016, Kwame has owned 5 blenders valued at $2,700. He expects to replace all 5 by the end of the next year. So at the end of the 3rd year of owning the blenders, he's going to replace them all. Okay. When drafting his income statements, Kwame uses the straight line method of depreciation. Okay. Now there's no other information. All I want you to do is to do income statement for 10 marks. right? So that's half of the marks in the whole question, right? The other half came from on top of here, right? It was 3 and 4 is 7. Wait, I'm missing something? Oh, okay, well, I guess there was 3 marks on the next page, but it wasn't relevant to what we was doing. Anyhow, right, now check this. Even if, let's say, you read that and your brain start to buzz and you get that feeling behind your eyes like, I know what I'm doing with the depreciation. Guess how many marks at most that might be out of the 10? 2. Maybe 2. Most likely 1. Which means even if you can't figure out the depreciation, how many marks you could probably get? 8 or 9. Do not let 2 or 1 marks in a question beat your brain into submission and make you incapable of getting easy marks. Get the marks you can. You can pass the exam at the very least with 8 out of 10, right? I mean, if you get 8 out of 10 generally, that's 80%, right? I think 80% is more than a passing mark. Maybe not a 1, maybe a 2, right? But still, it might be. We don't know. We have no clue what the grade bands are or what percentage is a grade any particular year. We don't. The examination body has never ever communicated that information to anybody on the outside, right? Well, first of all, there's no such thing as a distinction. CXC has said that they don't issue anything called a distinction, and they've also never issued percentages and grades. Well, the percentage that corresponds to a grade. You could Google it all you want. It ain't there. And unless somebody who can see CXC tell you that, then I want to see it in writing, signed and stamped. So if your teacher telling you that, just smile and nod. Or if you want to be curious, say, well, Miss, where you get that from? Right? Or so where you get that from? Is it online? So, yeah. But a distinction is a thing that was made up back in the day when the upper class used to get their grades, and of course the lower class who attended the same schools used to get the same grade or better. So the upper class said we will distinguish ourselves by calling our grade a distinction, because there's never been anything on any CXC certificate saying distinction. All right, so don't worry with them. Anyhow, right, so once again, the long and short of it, what I'm trying to say here is that even if this depreciation thing bug in your brain and you can't get it out, put everything else. Right? Worst case scenario, you get 7 or 8 out of 10. Best case, you get 9. I think that's still a pretty good scenario, don't you? All right, cool. Now, once again, let's just talk about, now we didn't finish talk about the depreciation. So Kwame uses what method? The straight line. Okay, under the straight line method, does the depreciation charge per year stay the same or change from year to year? It stays the same. Now, we normally have a formula which is cost minus residual or scrap value, then divided by the number of years or the estimated useful life. Now, they didn't give us the cost. Sorry, no, they did. The blenders were valued at 2,700, right? They didn't give us any residual value, but what's the number of years we expect them to be in use for in total? 3 years. So if you expect the blenders that cost you 2,700 to be in use for 3 years, and you expect the same depreciation charge every year, what's the most rational thing to do to find the depreciation expense? You divide the cost by the number of years. So you're going to divide 2,700 by the 3, right? So that's how you would get the depreciation expense per year. And 2,700 divided by 3 is 900, right? Other than that, we have no accruals, no prepayments, no provision for bad debts, right? So the question asks you to draw up the income statement, right? So I did send this separately in WhatsApp to everybody online. I sent it in the chart, the WhatsApp chart, right? So you can type in these things, right? Right, so now the question that Nyla had was, could we start with gross profit, right? All right, look, Aisha. All right. 1 second. All right. Hey, good afternoon, Aisha. How you doing? Good to have you on. Yeah, we started a little earlier today. I was able to finally start a little earlier. So we're doing the May 2017 question. All right, so you may need to watch the replay to catch it. So we're doing an income statement here. It has some information I'll put up that you might be able to use. All right, let me actually pull this down. Okay, cool. So, ladies and gents, what I'd like you to do, please, is to draw up the income statement. Now, they didn't give you like much room to put the name and that kind of stuff. They kind of put it on top of here. If you're ever in doubt as to whether to put the name, put it, right? So you could write on top of your Kwame's income statement for the year ended June 30th, June 2016, right? So what I was saying is that you could start with gross profit, right? And to calculate the gross profit, you would take this item here, 25,000 by 850, because item B asks us to calculate that, right? Now you could go ahead and use each of these items. You could use the this item and the cost, right? But I would suggest starting with this item here, gross profit, right? Okay, so what I'm gonna do is I'm gonna leave this up on the screen for you all. Hold on, let me actually just come out a little bit. No, okay, I'm gonna go back in. All right, cool. So yeah, so you could use your gross profit per unit, and the number of units is 25,000. Don't forget that. So we had 25,000. All right. Okay, so I'm gonna give you guys like a 7 to 10 minutes to sort that out. All right. Those online again. Okay, sorry. What I should do. Right. So let me send Aisha the what you call it, PDF. All right, Aisha, you can check it. It should be there already. All right. All right, guys. So again, you're starting off with your gross profit. So it's the 850 down here. All right, and then multiplying that by 25,000 because it's 25,000 units we sold, right? So again, they gave us that information on top of here. All right. All right, guys. Yeah. How was your phone today? Charged up?
Yes, it's on 38. Start charging up, and I have my charger too.
Okay, good. So Google Meet, I think I'll walk around the class. I'll be back in about 5 minutes or so, right? If you have any questions, you can type them out or WhatsApp me. But again, more WhatsApp. I'm getting messages, I just don't know when I get them. I don't open and go into each chat, which is a little laborious, time consuming process. I don't know. I have to change my phone. I look around to the two teams they have. There's only from 14 of them. And the 16, but then I. Right. So 911. So it's $11 per unit. So now we end up with this, right? 27.5 regular profit, 996. All right, good. Okay. Right. Okay. Okay. How we going there? What you trying to find? Yeah. One, two. Well, don't forget the depreciation. Right. So he has three blenders, right? In total, sorry, five. In total, it costs us 27. And it's for 3 years, so it's 2,700 divided by 3. And that adds up. So 900 per year. No, it's a separate line item. But yeah, it's supposed to be in here. So Steve, they could this will be right in here, stick it here, and just modify it. But again, they will correct what you have. Right? So you get marks for whatever you have that is correct. Yes. Right, so they didn't give you a percent, but they told you that they have the blenders are valued at 2,700. And we've had them for 2 years. And we're going to replace them in 1 year's time. At which time we will own them for a total of 3 years. So because it's straight line, what we do is you take the 2,700 and divide by the 3. And that'll give you the depreciation per year. Yep. All right, okay, good. No money. Right. Oh, wow. Good. Hey, Fazila, how are you doing? Oh, yeah, I remember Fazila with 2 L's and Ali. And then I had to ask if you're to Tariq. How are you doing? Good to see you on again. Alright, guys, 1 second. Nope, okay. That's affected or not?
Nah.
Just your take. All right. So the danger with that is if the page, if it doesn't dry in time, and you turn the page and you press, it'll stick, and when they open, it could just rip. So that's the risk you run. If you do use it, but that doesn't happen, I am not sure what the call is. I can't tell you for sure. I could try and find out, but it's just best to practice not using it. But I mean, even it's possible that if the examiners see you with it, they might just take it from you. So you gotta practice without your safety net. Long story short. A single line. I used to put brackets around it as well, just to kind of make sure it because when people see brackets, it's kind of like remove things, you know. At least that's my perception of it, you know. So yeah, a single line, at most a double, but don't scratch and don't dance, just and go on with life, right? Because the more that you do is the more what I call a visual distortion on the page. Because when you take that out, you have to put something back in. So one, you need room to put that back in, which might be at a premium because now you have that line and stuff might be already written. So if you scratch out stuff and take up your space, then where you going to put it, all right? So it's more a question of trying to keep things as neat as possible and give yourself room to fix the error. Because I mean, worst case scenario, you might have to write over the whole thing on the spare pages, which you'll have, but do you have the time to do so? You know. So again, if you use the write-off, I can't promise you that you will not be penalized. I just don't know to what extent. You know. And I know now, and for a while, there these things like almost like tape that you could like a dispenser, and you just do like that, and I think it dries almost instantly or whatever the case is. So. Yeah, it's not even really white off, you know? So in that case, I mean, I don't know. Yeah, I'll ask somebody who knows. I'll see if I can find one for you. All right, so folks, let's see if we could get this going, right? So I might need a little more room on the downside here. So actually, I will pull this up. Right, okay, cool. So this is part C, right? So C. Okay. Right. So Kwame is punches. Is that Domino's? I heard a horn outside. Yeah, and yeah, you might want to get that, right? And as you notice, there only 2 columns, right? Now again, we don't have any cost of goods sold to calculate per se. I mean, we could put it, but it's not like opening inventory plus purchases with returns and returns out and carriage and that kind of stuff, right? It's more like a kind of straight shot. Let me explain, right? So again, if you felt so inclined, you could have started with sales, right? So sales revenue, and they gave it to you, right? That was actually in the first part of the question. They told you he sold it for $275, right? So you can put it $275, and you can put less cost of sales, right? Now we worked out the cost price in the previous part of the question. That was the $250, right? So you could put your $250 per unit, right? Per unit. multiplied by, it was 25,000, right? All right, so minus 2.5 by 25,000, right? And then just subtract it, right? So 212,500, right? So, and that's your gross profit right there. Right? Now, the faster way to have gotten to that point would have been to use your 850 per unit from here. But if you had this, it's not wrong. You wouldn't lose marks. You wouldn't not get marks. You just can't get more marks than they would have awarded for it. All right? So if it was 1 mark, they can't give you 3 marks because you put 3 things, right? So the other way to have done this would have just meant to say gross profit and put the 850 per unit. Thank you. Multiplied by the 25,000 units. Right? So that's equal to 8.5 by 25,000. Right? See? So the same 212. Right? Same 212,500. Okay. Right. From there now, 1 second. Sorry, let me check on it real fast. Kobe. Yeah, man, Kobe. Right. Less expenses. Okay. Right, so let's go back to the next page and check out the expenses. Right, so again, even if you couldn't figure out the depreciation, you have 5 items here. You get at least a mark each for them, right? So get your 5 marks, right? Okay, right. So we have rent. Actually, let me Right. So rent, you have 36,000, and you have electricity. Yes, yeah? Electricity. All right, 18,950, and we have insurance. What is that, boy? 4,500. Oh, nope, that missing a zero. Missing a zero. There you go. And we have wages, 54, 240, and then maintenance and repairs and repeated. Wow, my brain, yes, right. So 60, right. And don't forget, right. So even if that's all you got, and you couldn't figure out the depreciation, you can still get at least 5 or 6 marks from where you have there, right? So 1, 2, 3, 4, 5, 6. The depreciation, right? But I made it 7. So just for the record, right? So it was $2,700 divided by 3 years. Right. So you add it up, pull it across, right? And then just subtract that from the 12,500. Right, that income. Right, I'll maximize that. Actually, I'll zoom out a little bit. Because first things first, let me send a picture of the above. Hold on. So 1 sec. I'll send us this picture as well. The 2,700. All right, give me 1 sec. I'll show you if the picture would take. It snapped. Okay, there you go. Close off that. Cut off some. Right, we got it from here. For the 2 years ending 30th June 2016, Kwame has owned 5 blenders valued at 2,700. All right, so that's where we got 2,700 from. And thank you for asking. All right, I appreciate it. Right. Okay. So that's the solution for the 2017 May question, Kwame's punches. Right. So again, what we saw, hold on, let me actually yeah. Right. Now if you like a single column format, you could just pull this across here and then skip some lines that I'll show you next time. Yeah, okay, cool. So Google Meet, ladies and gents, if you guys are good with that, just kindly give me a G in the chat. Right? And don't forget to send pics of your work as you go along. All right, because of course I have some parents who specifically asking me to keep track of the work, the pics that you send me. You all should know who you all are. If you don't, well, you may be in for a surprise, and not necessarily a nice one. All right, so do your thing. All right, but don't forget to send the thing. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. All right, 11 out of 12. All right, cool. All right, so we close. Very good. All right, in class people. Well, I know you kind of just joined. Yeah, so basically what happened in the question, let me show you real quick, right? Was they gave us this information here. So they told us that we sold 25,000 fruit punches for a total of this. So this is your revenue, right? So and then they wanted the selling price for each. So all they had to do is just divide. 275, 11. The next piece they gave us the cost for each one. So there's a breakdown of the cost of each of the fruit punches. When you add it up, you get 250. So when so if they want the gross profit for each one, you just subtract that from the 11. Right here, see? So then price was 11, and then you have 250 as the cost. So you just subtract going down, right? And then the last thing they asked for was the income statement, right? Now they give you a nice list of 5 expenses here, and they try to tie you up with some depreciation double talk here. They tell you, well, Kwame making punches, so you have some blenders. You have 5 blenders, right? Valued at 2,700. But here they start. They start by saying for the 2 years ending 30th June 2016, you only 5 blenders. And then he expects to replace all blenders by 30th June 2017. Right? So the 30th June 2016 is the current year end. So we have owned them for 2 years already, right? At the end of the next year, we would have owned them for 3 years. Now we're using straight line method, right? So for the straight line method, if you had a percentage, you multiply by the cost. We do have the percentage, but we do have the value and the number of years that we expect. Well, we had to figure out the number of years, which is 3. So all we had to do is take 2,700 and divide by 3. And that'll give us 900 per year for depreciation, right? No. Yeah, that's it. See? Straight. Right? Another big mistake some people made was like, okay, well, sir, since this is for the 2 years ended, you had to multiply 900 by 2 and get 18. Like, no, it's not for the 2 years ended. We've owned them for 2 years thus far, but the income statement is for the year ended. So it's 1 year. All right? Right. So why multiply 25,000 by 850 and the selling price? Right. So we actually did that. So what I'll do, I'll draft it up again, right? So let me actually, I'll copy and paste this and bring it down, right? All right, so give me a sec. Right, so we could do sales, revenue, right? And that's 11. So right, so 11 by 25,000 less cost of sales or cost of goods sold, which is the 250. Crap. Right, so it was 250 per unit multiplied by, by the same 25,000 units. Right, so that's minus 2.5 by 25. Right, and then gross profit will be the difference. Right, which is the same, if you look at it, the same 212,500 as above here. Right, so you could do it this way. Nothing is wrong with that at all. Right, so 1, 2, 3, and 4, 5, 6, 7, 8, 9, and then 10. So okay, so maybe this might have been a slightly easier way to explain the allocation of the 10 marks, right? But if you went straight to gross profit and started there, I don't think anything is wrong with that. The only thing I will say in favor of this particular presentation, as opposed to the one before, is that they are asking for the income statement, which is supposed to show revenue earned and the expenses incurred in the generation or earning of that revenue. So I would say if you're not sure which one to use, maybe err on the side of caution. If you're crunch for time, like real crunch, and shaving off 2 lines will save you some time. To me, once you show your working here, the same working I showed up here, which is the 850, right? It should be fine, because to me, they kind of scaffold you or made you do the question in such a way to make it kind of more convenient to use this. Now, how many lines we had? So 1, 2, 3. Sorry, let me cut that out. All right. 4, 5, 6, 7, 8, 9, 10, 11, 12 lines. Do we have 12 lines to use? Let me zoom out a little bit. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we had more than enough lines. So yeah, okay. So that might have been the better way to do it. So I'm gonna send this picture in the chat too. All right. Okay. Right. So I hope that answers your question. All right. 12 nights or 12th night? Oh, I was like, what? Okay, all right. Okay, in class, people, are we okay with the income statement on the screen there? Any questions? Anybody? Anything? We okay? All right, cool. Okay, so folks, we're going to go to our next question. Right along me. Sorry. Oh, right. Right. The next question is stress ease. Okay, cool. So let me actually pull out stress ease. This is 2017 January, right? All right, so I'm gonna put this to print in class. All right, so hold on. Do I have any left there? Oh, I have one. Okay, so 12 is fine. All right. No. Let's not reverse the pages. Thank you very much. All right, one-sided. Yeah, one-sided is fine. Right, and for my Google Meet people and for Aisha, I will send you guys online here. I know it's visible, but I think I just rather you all have it available if you want to move it on your Google or move ahead with everything. So, Sharina and Margaret, hashtag the fun place. How you all doing? Good to have you on today. Oh, paper done. Wow. Okay, one sec. Well, that's just one point. All right. Let me zoom in. This might be the max. Yeah, I think everything is visible there. All right, just give me one sec. Let me sort out the paper situation. I guess I did. All right, I did print out. So y'all can actually take a read in the meantime and work ahead if you want. Right, but I'm bringing a physical copy for all those in class. All right, so folks, let's take a read here and see what's going on. So this was the Jan 2017 question. So 2 papers in the same year had not unconventional income statements. So Stress Ease Enterprises provides a service called Client Rescue to its clients by collecting them from locations where their vehicles are stored and delivering them to their destinations. So this is basically like a roadside assistance thing, right? So like some insurance companies offer it free with the renewal of your policy. We actually used that a couple of years ago. We were carrying my step. It was June, July, August. I was carrying my stepson to his summer camp, and we went. He wanted Starbucks first, so we passed Movie Town, and then we went and got the Starbucks. We went to start the car, and car didn't want to start. So I had to call in the money back at the thing, and they came and he jump started, and everything was good. Had to replace the battery, but anyhow, so that is a service, right? It's a service, right? So what does that imply? It's probably not going to have an inventory or stock, okay? And they said that it provides a service. That was in the first few words, right? Okay. Now it says the firm owns 2 vehicles worth $210,000 in total, right? So those 2 vehicles, they will be classified as assets. But quick question: current or non-current? Non-current, because we expect them to last for more than 1 year. Okay. The following information is provided for Stress Ease for the year ended 31st March 2016. So again, we have a non-31st December year end. Okay, so just bear that in mind. So 4,300 clients pay a retainer fee of $100 per year. So what a retainer fee is basically they'll pay that to be able to call you, right? To say, hey, come and pick me up my car store, right? So that's like your subscription fee or your membership fee. So you pay that just to be able to call. But then when you call, there's a charge of $35 per kilometer. So it's like a real expensive ride share, right? For the client rescue. So in quarter 1, so the quarter refers to the quarter of the year. How many months in a year? 12. If you take 12 and divide by 12 and divide by 4, you get 3. So every quarter of a year is 3 months. So they didn't give you a breakdown of revenue. They gave you much as monthly, they gave you a breakdown by quarter. So in the first quarter of the year, January, February, and March, they provided 1,923 kilometers. So how would you find out how much rescue fees they earn off of that? You'd multiply that by the 35, right? In quarter 2, they provided 2,680 rescue kilometers. In quarter 3, 3,175. In quarter 4, 1,848, right? Now, just to jump ahead a little bit, they are going to ask you for an income statement. There's no necessity to show the revenue earned per quarter unless they ask for it. All right? And most likely they're going to ask you for an income statement for the year. So in which case, what would be the easiest thing to do therefore? To find the revenue earned just off of this item. You'll add up all 4 and then just multiply that by 35, right? But a next point to note, did you realize we have 2 sets of revenue? And I'm not talking about each quarter. I'm talking about the first item. You have the retainer fee, and then you have the rescue fee. So you have 2 items of revenue. Normally we have 1. So this is another way in which this question was peculiar or different from almost any other question that they've ever brought income statement-wise. All right? Now, just so you know, they haven't brought stuff like this since then. That does not mean they will not. Right? Anyhow, now Stress Ease Enterprises incur the following costs during the same year. Driver salaries, $160,600. Fuel, $198,500. Vehicle usage costs, $27,430. And then depreciation on vehicles, 30% straight line method. And the cost was up here. So how would you find the depreciation per year? Multiply 30% by 210,000, right? So they want the income statement for the year ended 31st March 2016. Now they started it down here and it went on to the next page. So I suggest you use the next page, right? As opposed to having to start it here and then shift across. All right? So if you have 2 items of revenue, right, you can, so you know how you add up less expenses? So start up by heading up revenue, and then when you drop down the next line, put the retainer fee as the first item, and then put the client rescue fee as the second item. All right? Now you could do the workings in the body of the statement, or you could do them elsewhere and reference them. All right? And then you have 1, 2, 3, 4 items of expense. All right? And it's 10 marks. So head up properly. Stress East Enterprise income statement for the year ended 31st March 2016, even though they put it here, right? You have 2 items of revenue, 4 items of expense. So that's 6 items. And 10, is it 10 marks? 9, there's 9 marks. Okay, cool. So you have 6 items, one of which has a little extra working as a depreciation, but I don't see that being 2 marks, but I could be wrong. One for the heading, so that's 7, and maybe a couple for your subtotals or whatever the case is. All right. Okay, so I've given you all about, again, about 10 to 12 minutes to sort that out. All right. And again, if you have any questions, please feel free to ask. You're not under exam conditions, not yet anyway. Yo. Which account? Which revenue item? It don't matter. You could put the retainer fee first or the client rescue fee. Once you put them both. Nah. Right? So you'll just have these 2 items of revenue and you'll add them together and give us a subtotal for that. And then you'll have less expenses. And then proceed as per usual with that. Oh, already there. Um, 1 second. Feel heavy metal. Right. Oh. Sorry, that's just me sending something in the chat. That's just me sending the link to the live in the chat. I wanted to see something, but for some weird reason, I can't access my live from the studio on my phone. No, I got it. Thank you. All right. All right, so I'll give you a couple minutes again, and then we'll starting. Okay, cool. That's kind of what I wanted to check the audio. Shinny glass. How y'all doing? Oh. Oh, okay. Did not realize that was that. All right, cool. So let's starting here, right? Now I have a solution already done. Let me see if I could just don't like just putting up a static solution. I like to explain stuff as I go along. Oh, this was Okay, well, I guess we're here, so let's organize that. Can I zoom in a bit more since I'm doing... Okay. Right, so we have two revenue items here. 4,300 clients pay a retainer fee of 100 per year. So if you multiply 4,300 by 100, you get $430,000. So that's just the membership fee, the retainer fee, which is quite a lot. For the client rescue, what I did was I added up these items here, right? These kilometers, and then multiplied that total by 35. So that would be here. So anybody else got 9,626? I'll multiply that by 35 to give us 336,910, which interestingly enough is actually less than the membership fee, right? But it's still, I mean, it's still like within less than 100,000 of it. So your total revenue was the sum of those two things. We okay with that? 766,910, right? If you have any questions about the revenue, now is a good time to ask, yeah? Right? You all okay with on the screen there so far? Far side, we okay with that? Okay. Right. Now, from there, we have these expenses, right? Driver salaries, fuel, vehicle usage costs. Right. So driver salaries 166, fuel 1985, vehicle usage cost 27,430. Now the depreciation is 30% straight line. And we're multiplying that by the 210,000. Right? The firm owns two vehicles worth 210,000 in total. 30% sorry, is the depreciation rate on the vehicles, which is 63,000 per year. So when we total all the expenses, we get 449,530. And then when you subtract that from the 317,380, sorry, subtract that from 766,910, you get net income of 317,380. No, sorry, 1 second. So Jan 2017, Jan, so 2017, Jan, PoA paper 2. Okay, so Google Meet, if you guys are good with this solution, just kindly give me a quick G in the chat. If you need me to re-explain any particular aspect, give me an R, right? And if you could be specific about what you'd like me to re-explain, that would help me to help you faster. Sorry. Ow. All right, cool. All right, so what I want to do is I want to send picture, question, and solution. I'll put it back up this. Give me 1 sec. All right, cool. All right, in class, people, are we okay with the income statement on the screen? Any questions? Anybody? Anything? Good? All right, cool. All right, folks, so we're going again. All right, so let me just double check I sent the right thing there. Yeah, okay, cool. Oh, probably Caleb is printing something. Okay, I almost forgot. Oh, right. So let's take that off. Right. So that was stress ease. Derek. Okay, cool. This is Jan 2016. No. All right, this one, this one. Cool. All right, let's put out to print. All right, so while that's printing, let's see if we could zoom in more. Yeah, this might be a tough one to show everything on the screen at the same time because we have all that stuff plus additional information. So let me just pull up you guys. Right, guys, Google Meet, just open that. I don't know why it's looking like the PDF blank. Because it's showing up blank on my side. The other one had stuff, so I don't understand what's going on there. Let me know now. Yeah. Wait, was me printing stuff? Okay, cool. Yeah, it was me printing stuff. Right. So all right, folks, we're going to take a quick read here and then give you guys some time to try the question. So Derek Davis, the sole proprietor of DD's Jam Shop, started trading on 1 Jan 2015. Now, if he started trading on that day, it's his first day, his first year, right? And provides you with the following list of balances, which was extracted from his books on the 31st of March 2015. Now, tell me something. If he started on 1 Jan 2015, 31st of March 2015, is that 1 year? No, it's less than a year, right? How many months then? 3 months. So remember in the previous question, they gave us a breakdown of revenue by quarter for the kilometers. So this is the first quarter of his business's operation, right? Now let's see. So it says inventory on 31st March was valued at. So that's so on 31st March, that's the ending date, right? The current end date. So that's his closing stock. You have bank, you have cash, accounts receivable, accounts payable, fixtures, fittings and equipment, premises, capital, transportation out, also known as carriage out, discount. So look what they did here. They put discounts in the same line in 2 columns. So we know the debit column is the discount allowed. So the 160 is the expense, but the 185 is discount received. That's the revenue. Okay. Wages and salaries, utilities, including water rates, 1180. Look at next revenue, rent revenue, right? Loan is a liability. And look at this, gross income. Gross income is also gross profit. So they didn't start you with sales. You don't have to find cost of goods sold. It starts you off with what? Gross profit. So they did some of the work for you. Now, We have additional information. Fixtures, fittings, and equipment is to be depreciated at 20% per annum using the straight line method. Okay, so what do we do with the percentage under the straight line method? We just multiply it by this item here, right? But what does per annum mean? For a whole year. Are we doing up something for a whole year? No, it's only 3 months out of the 12. So after you multiply 20% by 7780, which will give you the correct. So 20% of 7780 will give you the whole year's depreciation charge. But we are actually only doing the income statement for the quarter. So you're going to have to divide by 4, like Liam. And look what I said, beginning with the gross income. So they told you what to start with, right? Well, once again, it's an unconventional way for them to present an income statement, but it shows that they expect you to be able to operate under such conditions, right? One employee has not yet been paid wages of 900. Okay, so if you haven't yet paid somebody something, what are you supposed to do with that? As an accrual, you have to add it on to the 4750 because that's the wages and salaries item, right? So the 900 is an accrual. The water company has a credit of 160 for payment received in advance. So that has to do with this one here, utilities including water rates. So a payment received in advance is also known as a prepayment. And what do we do with prepaid? We subtract it. Very good. So this 160 is going to be subtracted from the 1180. Mr. Davis rents part of his shop premises to a tenant who owes $1,500 in rent for March. So look, they have rent revenue is $3,000. But that $3,000 is clearly only for 2 months, January and February, because the tenant still owes $1,500 for March. So this is an accrued. Sorry, this $1,500 is an accrued revenue, and whether it's an expense or revenue, what do we do with the accrued portion of it? We have to add it. So this $1,500 is going to be added to the $3,000, and interest is to be calculated on the loan at a rate of 15% per annum, which is for a whole year. So when you find 15% of the 2560, that's going to give you the expense for the whole year. But we are only doing the income statement for the quarter or 3 months. So you're going to have to divide whatever that is by 4. All right? Okay, so they wanted to do the income statement for the quarter for Derek, right? And that is 11 marks. All right? So I can't fit everything. Let me see what I could fit. Okay, so we don't need the closing stock, bank, or cash account receipt. Okay, so we need from fixtures, fittings, and equipment. Yeah, that is correct. So you have stuff to add to your gross profit. All right, so I think that's the best I could. So can I do a 150? I could do 150. All right, cool. So if I do 150. Okay, so everything just sort of fits. Okay, I think everything is still legible to those online. The rent revenue and the discount received, yeah. But don't forget for the rent revenue, you have an accrued portion. So you have to adjust that before you add it. All right, so you're going to start with your gross income. All right, so don't forget to head up, Derek DD's Jam Shop income statement for the quarter ended, whatever it is, 31st March 2015. Start with your gross income, 8793. All right, you have 2 other revenues, the discount received, 185, and then the rent revenue, which has to be adjusted for the 1500 accrual. And then you have some expenses. You have depreciation on fixtures, fittings, and equipment. The premises is clearly not being depreciated. Transportation out is an expense. The 160 for discount, as discount allowed, as an expense. Wages and salaries has to be adjusted for the 900 accrual. We're going to add that on. Water company has a credit of payment in advance, as a prepayment. So you're subtracting that 160 from the 1180. And the loan interest has to be calculated. So it's 15% of 2560, but that's for a whole year. So to scale it down to the quarter, you have to divide that by 4. Because it's only for the income statement is not for the whole year. So you can't charge a whole year's expense in it. You got to scale it down. You got to adjust it downwards. All right. So organize that. Let's see what we come up with. Katie, hey Esther, Ferg, Shami, how y'all doing? So go back over 52. Oh, okay, no, even though the PDF was blank, it's sorry, it wasn't blank, it looked blank. What was I looking for? All right, so this. Oh, hey Charlie, how you doing? let's see if we could help you with at least the revenue side of it, right? Right, so let's just talk about the revenue a little bit first, right? So Derek Davis income statement for the quarter ended 31st March 2015, right? The gross income they gave you as 87.93 on the top here, right? Now we had two revenues to add. 185 discount received, which had no adjustment to it. And then we also had, we also had the rent revenue. So the rent revenue was 3,000 in the list of balances. But just below that, they said the tenant owed 1,500 for March. So that was an accrued portion of the revenue. We had to add that on to the 45, right? So you'll see that down here. 3,000 plus the 1,500 is 4,500. So we add those together, get 4,685. When you add that to your gross profit, you have the, well, what I was calling the adjusted gross income, which apparently is what is called again, apparently. All right, so 13,478. All right, so how are we feeling with that so far? Looking like something along the lines? Any questions, anybody, anything?
So I thought you said the adjusted thing.
Right. So that's what some Fatima boys told me that their teacher said. And then Liam told me that his class spent an hour last week searching for adjusted gross profit. I'm like, okay, cool, well, I guess we could use it again. All right, Google Meet, just give me a quick G if you're good with this first little section here. I'll give you some more time to finish off the rest of it, right? So I know it had quite a few things, but I just want to know if you're good so far. All right, if you need me to re-explain how I got any particular item, let me know. It's not a problem. Give me an R for re-explain. All right, but if you're good, cool. All right, so 8 out of 12. All right, so that means 4 people. All right. Okay, so we're gonna put this back up now. All right. All right. So I'll give you a few minutes again, and we'll correct what we could correct and see what else we could maybe squeeze in before today is done.
I find it was good. Leads and
All right. Okay, so let's see if we could fill up some more stuff. Okay, so the first thing could be the depreciation. Let me see, what did I do first? Right, so I put the transportation out. So there's no specific sequence or order in which you have to list the expenses. I guess I put them in order of ease. Just give me 1 sec. Let me see if I could do something with that. Yeah. So the 396 as the first expense that I have. The next one is the discount allowed, the 160. Then I have the wages and salaries. So remember, the wages and salaries, you had 900 outstanding as an accrued portion. What do we do with accrued portions? We add them. So 4750 plus 900 is 5650. Next, we have the utilities, right? So it says including water rates as 1180. And down here they said the water company has a credit for 160 for payment received in advance. So we prepaid the expense. So what do we do with prepaid portions? We subtract them, right? Then I'm seeing the interest. So the interest, right? So the interest was 15% of 2560, and then you have to multiply it by a quarter or divide by 4, right? So you can multiply by a quarter or divide by 4, right? It means the same thing. So we got $96 for interest, and now the depreciation, right? So that is to be depreciated 20% per annum. So 20% of 7780 is how you start off, and then again you either multiply by a quarter or you divide by 4. Sorry. Divide by 4. So these are your expenses, and then you add up your expenses, you get 7711. You subtract that from your adjusted gross income, and you get 5767. All right. So this is Derek Davis. So I'm gonna send it. So while I'm taking the pic, so Google Meet, if you guys are good with this solution, kindly give me a G in the chat if you need me to re-explain any particular part of it. Even if that means the whole thing, let me know. It's not a problem. We have time. I'm just cropping the edges off it, right? Give me 1 sec. Right. Okay, cool. All right, not bad. All right, in class people, Teresa, how are you feeling with that one there? Any particular questions? Sure. All right, okay. Talk to Liam. You okay with that? All right. Shamo and Noah, we all right there? All right, what about you, Jadon? All right. Okay, my far side, you all okay on the screen there? You sure? Any questions, anything? Okay, all right. Nylan page. Good? All right, cool. Okay, cool. So, not seeing anybody copying anything. Oh, just okay. All right, so we have about a little less, just about 10 minutes again. So we could at least start something else real quick. All right. But probably after this, therefore, we can maybe even start balance sheets on Wednesday. Because after this week, next week is Carnival. Well, the week before Carnival, so we know things are a little helter-skelter. Okay. Sorry, did something now kick back in? Okay. All right. Right. All right. So Google Meet, let me send this to you guys in the evening, and I'll send it to Aisha as well. Aisha, I didn't send 2016. Yeah, sorry about that. Let me give out. Alright, now we might be able to finish the whole question, but we can make a little dent in it. Maybe all we finish it. Maybe fix over the case, right? Probably so. All right, folks, let's take a read through here and see if we could make a little. Hey, Timmy, how you doing? Right, so Ceres Land is so this is the 2015 May question, by the way, right? So this is actually the first paper where they actually gave you space, or was that Jan? To write on the paper. That might have been the January, but 2015 was the first year this stuff was on the papers for you all to write on, okay? So Ceres Land, a sole trader, is to present financial information to its bankers to support a loan request to buy computers for the business. The following list of figures is provided for the year ended 31st December 2014. So we have plant and machinery, motor vehicles, long-term investments. So they kind of present it in a way where the first few items is like the balance sheet almost, right? Because the first three items are non-current assets, and you have current assets and current liabilities, right? Now, it's not presented in a debit and credit format, all right? Now, we have accounts payable, bank overdraft. Check it, sales revenue, and then they have cost of goods available for sale. So normally, we'd have to take opening stock and add purchases to get cost of goods available. So what they've done is they've kind of compressed that for you. But then to get from cost of goods available to cost of sales, you have to subtract closing stock, which is here at the top of the question. All right. Hold on, let me see. Can I actually? 1 second, sorry. See if I can just pull up right around there. Right. Okay, so that's all the relevant information. Right. So now, cost of goods. So then they have. So this question was very strange in how they brought it because they brought the adjustments in the body of the table. Now, please note, it's not a trial balance. It doesn't have two columns, right? It has one. So we have insurance prepaid and insurance paid. What do we do with the prepaid portion? We subtract it, right? We have interest expense paid, salaries and wages paid, miscellaneous expenses owing at year end, which means accrued, and miscellaneous expenses paid. What do we do with the accrued portion? We add it on. Yeah. What? Oh, yeah. A mortgage is a liability and capital is capital. So they kind of they separated these from the other assets and liabilities on top. Right? So using the information provided, prepare an income statement for the year ended 31st December 2014. Show clearly the amounts for each of the following: cost of goods sold, insurance, and miscellaneous. Right? There's only 8 marks. All right? Okay, so I want you all to at least try to make a little dent here to get from sales to gross profit. If you could get further, cool. If not, no problem. But I also want you to finish here. Nothing. Because it is on the income statement, right? That opening capital will be in the balance sheet. Right? As a non-current liability, for sure. So that's also irrelevant to the income statement, except for interest, which they gave you already. Well, because the cost of goods available for sale is opening inventory plus purchases. So like I said, they added those two already for you and gave you that figure. So all you have to do to find cost of goods sold is subtract the closing inventory from that. Yeah, let's start with that. Sales revenue. After what? You have to subtract the closing inventory from the cost of goods available to get cost of sales. So normally cost of sales is opening stock plus purchases, which will give you the cost of goods available. And then from that, you have to subtract your closing stock. Yep. The opening stock and the purchases, yes. Huh? Sales revenues.
Sorry.
No other revenue. Yeah. All right, guys. So it's a little after 6, so I know some of you have to run off. So let me see if I can at least start you off, right? Like I was saying, these questions that came are a little strange. Right. Let's put that down. Right. So again, you'll start up with your sales revenue, 363,170. Your cost of goods sold is, yes, opening stock plus purchases minus closing stock. But opening stock plus purchases gives us the cost of goods available, which they gave us outright. The closing inventory was on top. So you have to subtract that 24,550 from your 206,850. That will give us your cost of goods sold of 182.3. Sorry, my head blocking. My bad. Right, 182.3. And then you're subtracting that from your sales revenue to get gross profit of 180.87. All right. Now, I don't know how far anybody else got, so I'm not going to spoil it, right? But I have to stop there because I have maths class and I had to get something to eat between now and then, right? So what I want you all to do is finish off this question. I will send it in the chat, the solution, so you all can see the solution, all right? So Wednesday, most likely, we are starting the revision of balance sheets from scratch, right? I know a few of you all requested it specifically, so I am going to go through it, right? Now, that's also a 3 to 4 session gig. I don't like to speed through things, but it means that we mightn't get to revise much else before mock. So if you're all looking for assistance in revision for mock, you can check out my channel, right? I have all the past papers from 2008 to 2023 there. I'm working on 2024, right? I might be able to give you all access to that first. But anything else you need, stuff from scratch, it's almost all there, right? Anything that's not there, message me directly, and I'm pretty sure I have it. All right, Teresa, I'll see you. All right, but apart from that, that's about it. So those for math, I'll see you in a little less than half an hour. The rest of you all have a good evening. And of course, if anybody has any questions and they get to ask during class, please feel free to message me. All right, I gotta go there. All right, Google Meet, I'm going. Yeah. I do, it's across there.